The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 55,474. Bitcoin is down about 0.9% over the past 24 hours, and the CoinDesk's Ether price ETX index is trading right now at 2366, but ETH is zooming up over 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And joining us now to discuss the crypto markets is ShapeShift CEO Erik Voorhees in Denver, Colorado. Thanks for joining us, Erik. So Bitcoin is taking a step back, Doge rallying, over the past couple of days, but now it's kind of also pulling back due to, with no fundamentals. Where are we in the crypto market cycle at this point of time, Erik?
I like to think of them as, seasons. And I would say at this point, we are in the late spring of the cycle. So I expect quite a bit of movement in these prices, over the coming 6 to 12 months. And it's just been very, very cool to see Bitcoin hanging out over $55,000. That's quite an achievement. Dogecoin, I have no idea what's going on there. That's just us.
We just always ask. All right, ShapeShift is changing its business model. You've announced that, to DeFi to avoid KYC obligations. You're supporting THORChain. That's your latest announcement. So, which allows crypto to crypto trading without middlemen. Correct? Maybe you can go over and explain to us in really simple terms how THORChain works and how it's different from all the other DeFi projects out there.
Yeah, so first you have to excuse the silly name because I think a lot of people dismiss it on its name, but it's actually quite a profound new technology. So back in January, ShapeShift announced that we were integrating DEXs so that our users could trade directly with these protocols instead of with ShapeShift. This allows us to no longer be an intermediary. And that was fun and exciting, but it had a big asterisk, which was that it only worked for Ethereum and ERC20 markets because all the DEXs were built on Ethereum. There was no way, for example, to trade Bitcoin for Ethereum. So we've, in the background, been working on an integration of THORChain, which launched last week. So THORChain itself launched last week, and we launched our integration last week on Tuesday. And what this allows is essentially someone to move between different chains in a decentralized way for the first time. So you can think of it as a Uniswap type model where there are pools of capital that other users have deposited, and anyone who is trading trades against those pools of capital. And so now using ShapeShift, you can actually trade from native unwrapped Ethereum to native unwrapped Bitcoin. I believe ShapeShift's the first company to have ever done such a thing, and we have been able to do it because of the integration of THORChain.
So wow. Erik, we've done the unwrapped swap. So can you kind of break down how that happens and what it means, let's say, for the average trader, retail trader? How should they look at this?
Yeah, I mean, for anyone who watches these markets, the reason that this is important is that not only now can you move between native Bitcoin and Ethereum, but other chains will interact with THORChain as well. And soon, well, actually already, you can trade Tether to Bitcoin. Tether Bitcoin is the world's largest crypto market currency pair by far. That has always had to go through centralized institutions. 99.999% of that goes through central custodians for the most important market in crypto. Now that THORChain is here, that market some portion of it can move to a decentralized, borderless, immutable standard. So from the perspective of moving this industry forward and realizing the goal of immutability and decentralization, this is a massive step.
Yeah, it boggles my mind how you were able to accomplish this. I mean, there's so many moving variables to consider. For example, like what happens when Bitcoin and Ether transaction costs rise? How does that affect the swaps there on the chain?
Yes, so these are relatively expensive transactions from a mining fee perspective. So it does not make sense for a $5 trade or a $10 trade, but a $10,000 trade or a $100,000 trade, the fees are actually far lower than you get with a centralized entity. So any central exchange that's charging 10, 20 basis points at $10,000 or up, that starts to be higher on a centralized exchange than it would be paying the mining fees. So I expect that THORChain will generally be used for larger orders, not for the average $5 trade.
Yeah, and it's fascinating that you've really stuck to the decentralization ethos and, the whole independence that, a lot of people in Bitcoin in the community really praise. Do you, in your opinion, do you feel that, centralized exchanges like Coinbase have sold out, going public, getting cozy with, the banking system?
No, I don't think they've sold out. I think they play a really important role in the industry. Part of the decentralization of Bitcoin, of crypto itself, is that you have all these different companies using all these different models to grow, ranging from essentially what are banks, right? Coinbase is pretty much like a bank at this point, and is now a publicly traded company, to completely anonymous, open source, decentralized protocols, and no one quite knows who built it, right? And everything in between. I think all of that is really important. If it was all the former, if it's all just a bunch of banks, then crypto hasn't really changed anything important at all. If it's all the latter, if it's all a bunch of anonymous open source protocols, then the status quo financial institutions are going to be much more hesitant to interact with it. Politicians are going to be much more wary that it's a good thing. So I think that diversified approach is really key. I'm super proud of what Coinbase has accomplished. I think that's a milestone for the industry, and really excited to see that.
So just to follow up on that, we talked last time about KYC, and you have written about how you don't want ShapeShift to use KYC. So following up on Christine's question, you had actually indicated that you thought the use of KYC was sometimes unethical, in the types of information that was being gathered. And it would seem that an exchange like Coinbase would fit into that category because they are gathering a lot of information about users in a centralized way. They'll ask you for a photo of your driver's license, for example. So, just on a more philosophical level, do you consider that to be unethical?
Yeah, I always view KYC to be unethical because you're essentially forcing innocent people to surrender personal private details that they don't want to surrender, and they are not even being accused of wrongdoing or a crime. So I think it turns the concept of justice on its head when you start suspecting innocent people without even an accusation of crime, let alone a conviction. And to endanger them by taking their personal private information under that regime, I think is always unethical. Now, Coinbase is not doing it because they want to do it. Coinbase is doing it because they're forced by the government to do it because they are a financial intermediary. So I don't fault Coinbase for having to do that. I wish they didn't have to, but the fault there purely lies with the politicians who are mandating and coercing such a policy.
Erik, would that also hold if the company decides to do that on its own? If they voluntarily said, "Look, we want to know our customers before we allow them to do business on our platform," would that still be counted as unethical if it's voluntary and without government interference?
Yeah, good question. Any voluntary exchange between consenting adults, I don't find unethical. So if a company wants to ask for private information from customers of their own volition, and the customer is willing to provide it to that company, there's nothing necessarily wrong with that. But that's not what's happening in KYC. It's not a voluntary decision of the company to do that. It's forced on them by the financial regulations because they're a financial intermediary.
One more question about the market and just crypto ETFs. That's something that people are talking about. Do you think that's necessary?
I remember in the last market cycle in early 2017, everyone was very eager for the SEC to approve the ETF, the Bitcoin ETF. And the decision came down that it was being denied again. The market crashed by 10 or 20% for a couple of days or a week. And we were all bummed that didn't happen. Fast forward 4 years to today, I don't even know that it matters anymore. Bitcoin is far bigger than a Bitcoin ETF at this point. The SEC has just given up the opportunity for the U.S. Financial system to lead in this regard. But Bitcoin does not wait for anyone's approval. Bitcoin does not ask anyone's permission. it grows because it provides utility to people. And so at this point, I don't know that it matters that much. Certainly, it would be better if that was permitted for consenting adults in a free society to be able to buy shares of an ETF. There are certainly ETFs that are far more speculative and dangerous than a Bitcoin ETF would be. So it is very strange that the SEC has not approved it. But at this point, I don't even know that it would be that newsworthy anymore.
All right. Erik, I love having you on the show. Thanks for joining us this morning. Really looking forward to seeing what happens with THORChain. Good luck.
Thanks, guys.